In today's market update, we're going to be discussing the 20-week cycle, which should be forming a trough in stock markets around the world. We're going to be taking a look at several stock markets and also some other markets to gain a perspective in terms of what is happening to the cycles as they influence markets around the world. So let's start, as we usually do, with the S&P 500. This is SPX data, and this is the analysis we've been tracking for a long time. This is the October trough from last year, which you can see has been phased according to this analysis as an 18-month cycle trough. There is some debate to be had about that. It could in fact be a 54-month cycle trough, but let's not get stuck in those details at the moment. The important thing is that we have been expecting a 20-week cycle trough to form. We have a very staggered nest of lows, as you can see. We have a focused nest of lows from the 40-day cycle and shorter over here, centered on last week, and then we have this displaced 80-day cycle circle and then the 20-week cycle circle. A circle, of course, represents the exact time that a trough would be expected based upon the recent calculation of the wavelength of that cycle, and the whiskers are the lines to each side of that circle representing the reasonable range of time in which that trough could be formed. But that circle and those whiskers are positioned on the basis of the recent wavelength of that cycle, and by positioning the 18-month cycle trough over here in October of last year, we have had to shorten the cycles in the analysis, and that is why we get this very displaced 20-week cycle circle and 80-day cycle circle. When you get these strongly displaced circles, I tend to not pay too much attention to them. I rather focus on where the rest of the cycles are forming their nest of lows, which is of course over here in last week. But as discussed in recent market update videos, we've had this strong bullish move. The market has simply kept moving upwards in pretty much a straight line. We have been watching for this 20-week cycle trough to form for some time. And if we take a look at our 20-day FLD, remember that all FLDs, not only the 20-day FLD, are important measures of the cycle activity. You can see that last week price crossed down below the 20-day FLD. It crossed below the FLD so high up that the target that it generated as a result of that price crossing was a very miserable move down from the peak, which was very easily achieved. It is possible that that 20-week cycle trough formed last week. It is also possible that the 20-week cycle trough still lies ahead of us. And as discussed in previous market update videos, it is also possible that this 20-week cycle trough has in fact already formed. Spending too much debating the exact position of this 20-week cycle in the S&P 500, in my opinion, is a waste of time, because we simply do not have enough data yet to provide absolute concrete evidence as to where that 20-week cycle trough is. If we zoom back out again, you can see that there have been 164 days that have elapsed since the trough in October of last year. The average length of a 20-week cycle is 136 days. So at 160 days, which is where the trough formed last week, we are looking at about a 17% variation in wavelength. 17% is not a very big variation. Bear in mind, one of the principles that Hurst defined was the principle of variation, which tells us that these wavelengths are constantly varying. The cycles that we track in the markets are dynamic. Each and every iteration or wave of the cycle will have a slightly different wavelength. They do, of course, average out over time. A 17% variation is not a very big variation, but if we position the 80-day cycle trough as we have done over here in the first week of January, and then measure the number of bars that elapsed to reach last week's low price, you can see that was 90 days, and a 90-day wavelength for what should be an 80-day cycle is in fact a 32% variation, because the average wavelength of an 80-day cycle is 68 days. If you do not understand that, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video. And so this cycle is running late, at least the 20-week cycle trough is running late. It is not yet impossibly late. It is also possible that it still lies ahead of us, but we're going to take a look at several other markets to gain some clarity. The important thing when it comes to the S&P 500 is that the 20-week cycle trough has clearly turned out to be a bit of a non-event. That is because of the strong bullish move that has been occurring since October of last year. So let's zoom out and consider why it is that we have had such a bullish move in this market. Here is a weekly chart going back to 2018, and here of course is the December 2018 trough that I've discussed in other market update videos that in my opinion is a very important trough, potentially a trough of at least 9-year magnitude. I've discussed the fact that the 2020 trough, the trough that occurred in March of 2020, was possibly a result of fundamental interaction because of the pandemic sweeping around the world, and so its great significance apparently on this chart might be a result of the volatility that occurs when news events interact with the markets. It did nevertheless occur at about the time of an 18-month cycle trough, according to this analysis. Our next 18-month cycle trough was a subtle or obscured trough that occurred sometime in 2021. Most analysts would position that trough over here as a matter of interest in October of 2021, but let's not get into the details of that at the moment. The important thing, according to the longer-term picture of this analysis, is that we have a 54-month cycle trough in October of 2022, and the October of 2023 trough that occurred was therefore an 18-month cycle trough. You will notice, of course, that between October and October is not 18 months. Here again, we see the principle of variation. I've discussed this in previous market update videos, and it is for this reason that our 20-week cycle circle has been so displaced to the left. You can't really see it on this chart, but we saw it a moment ago on the daily chart, because we have had to compress the cycles in this 18-month cycle that elapsed from October of 2022 into October of 2023. Many people who are new to Hurst cycles find this a very difficult concept. How can we consider a 12-month or a 1-year cycle to be an 18-month cycle? That is because these cycles are subject to variation, and in our nominal model, our list of cycles, we don't rename the cycles according to the actual wavelength of the recent cycle. We call the cycles according to their average wavelength. The 18-month cycle does average 546 days, but there will be occasions where the 18-month cycle will play out over only 1 year. I know that some analysts question this. And in fact, some experienced Hurst cycles analysts argue with me about this point. But without getting too much into the semantics of it and whether that is a correct statement that the 18-month cycle could in fact only play out over 1 year, the obvious fact is that this is an important trough that formed in October last year. Why is it obvious? Simply because we have had a strong bullish move out of that trough. Now let's just come back to this subtle 18-month cycle trough that I pointed out earlier in the analysis. That is what is called a subtle or straddled trough. In other words, the trough of a cycle forms in the market, but it is not very obvious. That is, in my opinion, what is happening to the 20-week cycle trough at the moment. Can you see the 20-week cycle trough at this scale? It's very difficult to identify, isn't it? Of course, that might be because it still lies ahead of us, or it might be because it only occurred last week. But the important thing, in my opinion, is that we are still clearly in a bullish market in the S&P 500. When a subtle trough occurs, you have to look ahead to the next trough. What is the next trough that we are expecting in the S&P 500? It is, of course, the 40-week cycle trough, which, according to this analysis, would be expected to occur sometime in about June. But the fact that we are having difficulty positioning that 20-week cycle trough makes it difficult to anticipate the 40-week cycle trough, which is why we're going to take a look at some other closely related instruments to consider where that 40-week cycle trough could occur. The next important trough, of course, is going to be the 18-month cycle trough, which is expected towards the end of this year or early next year. Taking a look at the Nasdaq, you can see that we have some more definition in the price action. In other words, we have some more downward movement to balance the upward movement of the cycles. You will notice that Sentient Trader has positioned the 20-week cycle trough in its analysis. It is a hollow diamond. In other words, it is not an absolutely confirmed position for that 20-week cycle trough, but it is a probable position for that trough, and it has identified that trough as having occurred over here in the middle of March, on the 15th of March to be exact, at 141 days since the trough in October of last year. That is only 5 days longer than the average of 136 days for the 20-week cycle. This Nasdaq analysis is one of the reasons why I believe it is possible that the 20-week cycle trough has formed, not only in the Nasdaq but also in the S&P 500. Now, when a trough forms of any magnitude in a stock market, you will often find that troughs are forming in other stock markets around the world. They are not necessarily of exactly the same magnitude. In other words, the fact that the 20-week cycle trough has been identified, it's not confirmed, but it is a likely scenario. The fact that it has been identified in the Nasdaq does not mean that it has definitely occurred in the S&P 500. The 20-week cycle trough in the S&P 500 could occur at the 20-day or the 40-day cycle trough after the 20-week cycle trough forms in the Nasdaq. And so what is the trough that formed in the Nasdaq last week? Because again, we had a potential trough forming. If we zoom in and take a closer look at the price action, you can see here is our 20-week cycle trough. Here is the point at which price crossed the 20-day FLD. Price reached up and achieved its target. Here is the nest of lows for the first 20-day cycle trough following the 20-week cycle trough that potentially formed in the middle of March. Now, usually we would expect price to find support at the level of the 20-day cycle FLD at the time that the 20-day cycle trough formed. But price has struggled to find support at the level of the 20-day cycle FLD. Why is that? It could be for one of two reasons. Either our positioning of the 20-week cycle trough over here in the middle of March is incorrect, or we are beginning to see some bearishness come into this market. When price drops down below the 20-day FLD at the time that it forms the 20-day cycle trough, it is a sign that the bull is beginning to lose strength. Zooming back out again, we should consider what we are expecting to happen now. Here is, according to this analysis, our first 20-week cycle. Our next 20-week cycle will bring us down into the 40-week cycle trough, which I mentioned when we were looking at the S&P 500. This 40-week cycle trough in the Nasdaq analysis is expected towards the end of July, and we are expecting a less bullish 20-week cycle to play out into that 40-week cycle trough. Less bullish does not necessarily mean bearish, and I'm drawing a very bearish cycle here. That is not what we would expect given the recent bullishness, so let's change our scale a little bit. One of the difficulties with having a price scale that is scaled to the existing price, or the price that you are currently displaying on the chart, is it tends to limit our perception of what price could do. A less bullish 20-week cycle would be a cycle that does something like this and comes down perhaps into a 40-week cycle trough over here. But the recent slight bearishness that has crept into this market certainly causes us to sit up and take notice and track the status of this market. The important thing is that we are expecting some bearishness to begin to appear as the next 20-week cycle unfolds. Taking a quick look at the Australian ASX index, here is our prominent trough in October of last year. Here is our very obvious 80-day cycle trough that I've discussed before. It occurred 2 weeks after the 80-day cycle trough in the US markets. And here is our nest of lows for the 20-week cycle trough. Again, we are experiencing, it would seem, a subtle trough when it comes to the 20-week cycle trough. And we have exactly the same debate that we had in the S&P 500 and in the Nasdaq. Is the 20-week cycle trough this low point over here, or is the 20-week cycle trough busy forming at the moment? Certainly in terms of the interaction between price and the FLD, it would seem most likely that the 20-week cycle trough in fact formed over here in the ASX. Here is the circle for the 20-week cycle, and here is the nest of lows. If the 20-week cycle trough did form over here in the middle of March, as it was found to have formed in the analysis in the Nasdaq, then we are looking at the first 20-day cycle trough forming here. What should happen at the 20-day cycle trough? Again, price should be finding support at the level of the 20-day FLD. You can see that today it has just slipped down below the 20-day cycle FLD, and so price has some work to do to keep up to that 20-day cycle FLD and prove that the bull is still active. We will be watching this very closely, again, for signs that some bearishness is beginning to creep into the market. But I say beginning to creep into the market because this market is, to all intents and purposes, still a bullish market. The analysis in the DAX is in fact exactly the same. Here we have greater difficulty in terms of identifying the 20-week cycle trough as having occurred in the middle of March. You can see over here price didn't even make it down below the 20-day cycle FLD. It seems very likely that the 20-week cycle trough is in fact still lying ahead of us. That trough would be coming in at 165 or 167 days and still counting, which of course makes it almost 20% longer than the average wavelength of a 20-week cycle. But it seems likely that the 20-week cycle trough is still ahead of us in the DAX. Taking a quick look at gold, here is our 20-week cycle trough, at least 20-week cycle. It could be a greater magnitude cycle trough that occurred in the middle of February. You can see we have had 54 days that have elapsed since then. Here is the 80-day cycle trough that still lies ahead of us in about the 3rd week of April. Here is the 40-day cycle trough that occurred in the middle of March. In the previous market update video, the video that I made before the Easter weekend, which was on this Monday over here, I pointed out this bar here, which looked as if though it was a stopping price action. There was a strong move up and then price came down. But I did also point out the fact that price was still above the 20-day FLD. And of course it remained above that FLD, and so we remained in bullish mode to catch this move up here. The next thing that we are expecting is for price to come down into the 80-day cycle trough expected in about the 3rd week of April. But again, we've had a lot of bullishness in gold, and so the move down, although it is expected to carry us below the 20-day cycle FLD, it might not be such a strong move. And in a market update video soon, we must consider in greater detail the magnitude of this cycle trough to understand where all that bullishness comes from. Until further notice, or at least until price next interacts with the 20-day FLD, we are still bullish in gold. Finally, let's take a look at Bitcoin, and I have hidden some longer cycles here because there are many questions around the longer cycles in Bitcoin. Bitcoin, of course, has been shaken up tremendously, or it certainly was last year shaken up by all of the news events that were occurring in the crypto markets. But the cycles have come back to reassert themselves, and the cycle analysis seems very clear in Bitcoin at the moment. And so in September of last year, we had a very important cycle trough, which was a trough of at least 40-week magnitude. The next 40-week cycle trough, as you can see, is expected towards the end of May. We have this very neat nest of lows, which might be an indication that this analysis is very good. It is not absolute proof that this analysis is definitely the correct one, but it does raise my confidence in the analysis. Here we had a 20-week cycle trough in Bitcoin in January of this year. You can see that 76 days have elapsed since that trough, and it seems very likely that the 80-day cycle trough in Bitcoin came in the middle of March. So the middle of March was an interesting time for us because potentially an 80-day cycle trough formed in Bitcoin, a 40-day cycle trough formed in gold, and possibly a 20-week cycle trough formed in various stock markets. What are we expecting to happen next in terms of Bitcoin? Well, if we take a look at the 20-week cycle that played out over there, it was clearly a bullish cycle, indicating that the magnitude of this trough was probably greater than a 40-week cycle. And so far, our next 20-week cycle has also been a very bullish cycle. Again, the top of our chart seems to be limiting our perception of what could happen in Bitcoin. So let's bring this chart down a little bit and let's draw these M shapes for the cycles again. Here is the first 20-week cycle. Here is the next 80-day cycle, the first half of the 20-week cycle. Now, because we are coming down into a 40-week cycle trough towards the end of May, this cycle is, of course, expected to be less bullish than this one over here. It has so far already proved to be more bullish, it would seem. But certainly the next 80-day cycle, or should I say the current 80-day cycle, is not expected to be as bullish as the previous one. We are, however, still clearly in a bullish cycle, and I would not be surprised to see higher prices forming in Bitcoin. But at some point, Bitcoin must turn around and come down into this 40-week cycle trough, so we need to stay alert for that occurring. If we zoom in and take a look at the way in which price has been interacting with the 20-day cycle FLD, we are, of course, looking for evidence that the bull is losing strength, and so far there does seem to be a little bit of evidence creeping into this price action. Here is the first interaction following the 80-day cycle trough in the middle of March. Price has so far failed to reach the target of that price interaction. It hasn't dramatically failed to reach it, but it hasn't quite reached up to that target. Of course, as the 20-day cycle trough forms in Bitcoin, and it seems possible that that 20-day cycle trough formed last week in the first few days of April, we would expect Bitcoin to find support at the level of the 20-day FLD. That was a tough requirement because of the fact that the 20-day cycle FLD was rising so strongly at that time. And you can see the price, of course, slipped down below the 20-day FLD. It hasn't really found support at the level of the FLD, but it has certainly been trying its best to keep up above that 20-day FLD. And it looks as if though it might be on the point of getting back above the FLD, and therefore finding approximate support at the level of the 20-day cycle FLD. And so, although we are beginning to see a few cracks in this bullish price movement, there is no evidence yet that the bear is taking control of Bitcoin, and so we are also still bullish in Bitcoin, staying aware of the fact that the 40-week cycle trough is expected towards the end of May, and we would expect some downward price movement to bring Bitcoin down into that 40-week cycle trough. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.